Hi guys, it's Derek again here with the post-market update. S&P didn't really do much today because of the holiday, but let's just try to figure out what's going on with oil while we're sitting here because it's just really bad. It looks, since my last post, it just looks like it's uh, absolutely fell off a shelf. And that's all due to the larger um, cycle being broken here back about a little over a month ago. And when we last posted about oil on Advised, we were telling people that there was going to be a destruction of the of the of this contract, definitely with gold as well. And so, why is that? Well, it's just because of that right there. It did fail uh, pretty substantially here. That's a valid trend line, and you can't break it like that with that intensity. It was all due to the end of the Iran war. So, as far as what's coming up next, it's definitely to see about um, the last of this trend on Nasdaq, where we currently have the ability to take positions long as this trend line is supported. As long as it's supported, that means that prices won't roll over into the 40-day trough, which is probably expected in the middle of the month. What I mean is this resistance right here can be broken and then we can come back down here, just because that's the way that it works. The resistance is broken and then you make the 40-day trough, which is around 34 days. So on NASDAQ, you're looking at mid-July. It would be nice to know what's happening also to the uh, the bond market. The last time I looked at this, the bond markets had broken a large valid trend line of probably uh, it does look like it's still forming, but we can say that at least an 80-day valid trend line was broken last month. So, because of that, when you start looking at um, multiple things telling you that it's failing, you start to see a little commonality, and definitely it doesn't look like it's continuing higher at all here. The treasuries, it does look like it wants to continue to move down based off a larger cycle failure happening we'll say probably around last year around this time, where um, a larger cycle that we're not really caring about failed. Um, so, what is the next opportunity? It's likely that this back here is the first indication of bearishness in this. It didn't meet its target up here from the first interaction, the A interaction. And then you had the B as price casually comes through here. It didn't really do anything. And then finally makes a higher high before selling off. Now we're going to see the same thing, the support of the trend line or the treasuries break down, much like they did back here and here. So while things are starting to look a little better, they're not perfect. And the larger move is definitely in store as price continues to test down to this lower area here. There are larger cycles at play. So it's likely that it does continue. If it breaks this trend line over the next couple weeks, I would look for it to test down there based on that failure of that 40-day VTL right there. The good thing is gold is starting to finally turn around, but I don't think that this is an opportunity to go long here based on this break of the 20-day FLD. Think that you have to wait to see if this is a larger move. It'll break this 20-week VTL, and then we'll have confirmation of a larger cycle. But it does look as if, as we stated before on the newsletter, that there would be some destruction of the gold contract, and substantially so. A major peak having formed back here at the beginning of last year. I'm sorry, the beginning of this year. So the amazing thing is that there's just this remarkable opportunity in other things, stocks. So what I like to do again is go through today's, you know, having no data from the day before. This is a smaller, it will be a smaller update, but I want to go through Apple here. As you can see, it had a strong day yesterday. Uh, this could be the market leader as it increases on volume, but it's almost to its target up here, and there is resistance. So if Apple does meet this area up here and then finally turn around, we have confirmation to go short, I think. Because that would be in conjunction with the overall NASDAQ bearishness. So it's going to move with that. And we'll get the break of the treasuries and several other stocks at the same time here. It definitely does look like it could get really bearish. Amazon as well, breaking its seemingly its 80-day trough right here. And that's an interesting one because you want to, really think about this. These are major breaks. I had this level here for you from 230. And so staying below 230 on Amazon, you might want to look into that. We'll send out an alert for Amazon breaking 230. And when it does, we have confirmation that perhaps the next 20-day cycle is going to be, as you know, it'll probably be left translated the peak and right translated the trough, meaning the peak is early and the trough is late. So prepare for that. Um, and that will be a standard D interaction or an F interaction this month if it does move down. And that's all contained in the link below to get the free trading ebook. All right. I hope everybody has a great holiday, and this has been great to talk to you again. We'll see you on Monday for the post market update. Thanks.